And of course, oil had a huge rally yesterday. I mean, huge rally for oil. Even any day up, I guess, is a huge rally for oil. Okay, so let's talk about it because you've got the OPEC meeting tomorrow and then the OPEC Plus meeting on Friday. So let's walk you through now the top 4 OPEC storylines heading into tomorrow. Number 1, the market. They really want a 1 million barrel a day cut or more from OPEC. Top storyline 2. The market really wants a 1 million barrel a day cut. This is not an accident. I did this on purpose because that's it. When you talk about a market that has been falling, these are the storylines that matter. Of course, there are a couple of others. You can't really do this unless Russia plays. So what will Russia, a.k.a. Vladimir Putin, because all the decisions really go through him, will they participate? If they don't, even if OPEC does that, not sure it matters. All right, also, by the way, I'm standing in front of a plasma, not on a street in Vienna, eating Würstel. You know why? Well, a lot of reasons, but no media. Tyler, that was one of the things. In fact, they're not meeting. You're not allowed inside. No more of that stairwell down in the basement. That is because of the coronavirus. There will be media outside, but they're going to live stream it, so can do it here. And by the way, all of this comes down to demand, and I want to show you guys something kind of cool. You know the GPS company TomTom? Well, they've got a congestion index. You know, they track cars and figure it out. This is in Shanghai. Pick the biggest city in China because here's why. This is a week long. This is the average traffic congestion level throughout a day period, right? So these are the rush hours in the morning and the rush hours at night. Look at the Wuhan virus. It took out half of the traffic congestion in Shanghai. You know why? Because people simply weren't on the road. This is the weekend, basically, so you didn't have anybody moving as much. But look at this, guys. We have seen, according to TomTom, a bit of an uptick in traffic congestion. I think it's probably the first time ever, Tyler, that we have looked at traffic congestion as a positive. But there it is.
It's a very interesting way to look at it, and it's really where the whole situation meets the road, so to speak. It's a great illustration of that. And what we're hearing from people on the ground in China is that things are sort of starting to come back a little bit to normal. Brian, you're going to stick around and join us for our next conversation as we dive deeper into the energy slide and whether tomorrow's big OPEC meeting could head off the oil glut. Joining us now is Kevin Book, Managing Director at Clearview Energy Partners.
Afternoon.
Kevin, great to have you with us. How much oil needs to come out of the market to balance supply and demand, because there's been a tremendous amount of demand destruction?
Well, you heard Brian talk about the 1 million barrel mark. I think it's easier to think about what the demand destruction could look like in terms of magnitude. Your month or so of 2 to 3 million barrel per day disruptions in China, there's pretty much one of those in the world. You know, governments shutting down the flights into and out of countries probably won't last long if all the countries are getting sick, because what would be the point? But a rolling sort of global trend of national sick outs and staycations, that could be a serious demand killer. So if you break it down, just gasoline and diesel fuel in the top 10 oil-consuming markets, about half of the world, 200,000 barrels per day of 2 weeks of sickness for 20% of the population getting seriously sick and 50% of them getting infected. Those are the numbers, ballpark numbers we're working with. You know, what is 200,000 barrels per day? Well, it may sound small, but in a weak market, because you've still got that overhang of trade war, which hasn't gone away, it's just been extended. And with supply still surging, takes about 9 months for the Permian to slow down. That's not a particularly well-balanced market. So add on top of that these government interventions, and, you know, 1 million might be nice.
So, but I'm also hearing, Kevin, there's some skepticism that coronavirus is going to be a long-term destruction story from you. Is that right? I mean, so if you're OPEC, should you then kind of overreact to this and help to tighten the market or not?
Well, Kelly, I mean, it's not going to be a long-term disruption in terms of government intervention. I think the underappreciated side of the story is that people getting sick for 2 or 3 weeks at a time and staying home, not congesting the roads, as Brian described, that could continue happening throughout the year, maybe even into next year, until there's a widespread vaccine and immunization in the population.
If people stay home, it kills even more demand.
Yeah, it's a non-trivial thing. Yeah, absolutely.
And let's even take coronavirus out of it. I know it's hard to do, but let's do it, okay? Libya
Happily.
is almost completely offline because of basically, effectively, a coup, a civil war, whatever you want to call it. Libya is going to come back online at some point. Iran, they've been way down. By the way, they've been whacked by the coronavirus as much as anybody in terms of percentage of population. their output will pick back up. Iraq effectively has no government. If OPEC's looking at these things as well. When Libya, if everything stays the same or demand even increases a little bit, but Libya comes back online, Iraq goes up, Iran goes up, all of a sudden you've got too much oil. Because remember, the additional marginal barrel is worth exactly zero.
We've had headlines today about the division, I guess, between Russia and the rest of OPEC over how much to cut out of. Can you just kind of take us behind the scenes, Brian, a little bit? I mean, is the most important factor now to watch Russia in terms of getting them on board with a 1 million barrel a day cut? Yeah,
and there's kind of a funny video going around. One of the earlier shows played it. It's all over the internet. By the way, it's of Mohammed Barkindo, the Secretary General, and Alexander Novak of Russia foot bumping because they don't want to shake hands. They're doing it kind of as a thing. But here's what's amazing. That video shows them foot bumping. The OPEC meeting doesn't start until tomorrow. Russia doesn't go there until Friday. What does that mean? They're already there. They're already talking. It's kind of a floppy-haired, Beatles-haired looking gentleman. That's Novak's translator. What that I know because I've met these guys and I see them every couple of months. They're hanging out, which means they're talking. And if Russia gets on board, you might actually see a firm. Because as Kevin knows, the Permian is starting to slow its production growth. Slowly, but it is starting to happen.
I have been told by several people that Kevin, the entire oil space is overcapitalized. Is any of the oil, where is there the investable place in the oil world right now? Where is it? Is there one?
Well, you can find pockets of opportunity anywhere in any sector when it's down. But if you just count the BTU sloshing around the world, the amount of energy sloshing around the world right now, there's not a lot of good energy recommendations you could find at an oversupplied world in a slowing demand environment. You know, ordinarily you would say, well, the refiners profit when you've got a low oil price, but that generally relies on a robust demand, a discretionary demand in the Western world taking up those vacations, those trips, those extra activities. Not so much, hate to use the word, coronavirus compatible as an investment thesis.
A lot of these companies in the Permian and elsewhere, they borrowed a lot of money. How many of them are going to consolidate? Is the consolidation rate going to be huge over the next 3 years?
Forced or?
Stress.
Yeah, I mean, inevitably, that's the consequence.
Yeah.
There's $86 billion in debt that is due in the next 2 years, Tyler. Many of these companies can barely make it. I don't wish for anybody to struggle.
And at these prices, they're going to have more and more and more trouble making.
The problem is they got to keep pumping to pay their cash flow to pay the debt down.